Here we have the current stock market update for MicroStrategy Incorporated, stock ticker MSTR. Before we begin with this chart analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So what we're looking at here is the 4-hour time frame. Each candle on this price chart represents a 4-hour trading period. And as we can see here, the stock is continuing to sort of force its way upward. We have found some meaningful support here right around 186.40, 186.50. This was a prior area that we have been watching here. And it does look like, the next test to the top side is coming in at 227.15. So, of course, this doesn't necessarily mean that this level will break. But if we do see a break above there, what that tells us is that this series of higher highs remains intact. We really do need to see this happen. I mean, anybody that's bullish on this stock, does need to see this occur, because if we start to see share prices roll over here, a few different things can happen. One, you start to see an end to the uptrend, which is fairly obvious. But two, you also start to see a double top type of condition that is forming in these areas. And when you start to see resistance areas that are tested on multiple occasions with multiple failures, it starts to become more difficult to overcome those levels in the future. So if we were to see a little bit of a price spike here and then possibly a rollover failure type of thing there, that would be a negative outcome, because that would then strengthen this 227.15 area as being incredibly important for the bearish side of the argument. I mean, if anybody's going to short sell the stock, where would you do it? You would do it at 227. So that would really clearly, it would clearly define this area as a major line in the sand if share prices were to start to decline from here. I wouldn't start to get overly concerned about a top being in place unless we do see share prices fall through this 38.2% Fibonacci retracement zone. So quickly, we will just sort of, analyze what exactly is going on here. We do have these all-time highs at 227.15. If we look at the prior lows at 114.27, that gives us this major trend wave here. Clearly, this is the dominant trend wave movement, dominant price movement that is currently influencing prices. And as we can see here, this 38.2% Fibonacci retracement zone does come into fairly close contact with the price lows that were generated on October 17. So specifically, those price lows came in at 185.80. So, for the most part, these are rough areas here, because this is a very volatile stock. So we cannot expect share prices to sort of obey these levels to the penny. That's just not a realistic expectation for something like this. I mean, if you're trading Johnson & Johnson or AT&T or Microsoft or something like that, then maybe you can make those types of projections. But with something that's as volatile as MicroStrategy, and with something that is also tied very closely to the value of another asset, in this case, it would be Bitcoin. You're sort of dealing with almost a derivative type of situation where, losses in one area are then going to translate to the asset price of another stock. So, when you're dealing with these types of translations here between assets and things like that, you do see some slippage, and you can't really expect specific price levels to play out to the T. But as we can see here, overall, what we're looking at this point is the confluence of this prior support zone coming into contact with this 38.2% Fibonacci retracement area at 183.60. So this is sort of the zone to watch here. That actual historical support level comes in at 185.80, and then 183.60 is this Fibonacci support zone. And then in addition to that, what you have here, as you can see, this orange line is also sort of rapidly ascending here. When share prices move to this extent in the upward direction, you're also going to see the exponential moving averages follow right along there. And what we're starting to see here is this orange line coming into contact with this orange price zone. So, that's just a coincidence that they're the same color. There's no connection between those two things. But what this tells us is that the 50-period exponential moving average is quickly ascending right into this area. So in my view, this is really the main area to watch here. And it is a bit of a zone. because what we're also dealing with was a prior area of triple top support that had been tested, triple top resistance, I should say, that has been tested, on multiple occasions. So, you've got a lot of price signals here kind of coinciding in the same area. And for that reason, this is why I would specifically be pointing to 183.60 to 185.80 as being the most significant area to watch to the downside. I think that if you do see sharp prices break below there, that's when you have your signal that a top is in place. So at the moment, that's really not, it's obviously not what's happening here. We're starting to see sharp prices sort of re-threaten that 227.15 resistance zone. Currently, we're trading at 218.65. So, we're less than $10 away from there at the moment. And this is a very volatile stock. So $10 is not a very big distance. We will look at the indicator reading here quickly to see what signals this can give us. And as we can see here, there is a bit of a almost a flag pattern that's starting to develop in the indicator reading itself. We do need to see a break of this pattern in one direction or another. But for the most part, this is currently showing downward momentum, as we can see here. But it's very short-term in nature, and then the slope on this trend line here is very steep, and sort of dramatic here. So, that is sort of easy to break to the top side, and it does look like we could be on the verge of doing that at the moment. As you can see here, this purple line, that's the relative strength index, is starting to move into this white line, which is the trend line, the momentum trend line. And if we do break above here, then we can invalidate this downtrend in momentum. That's the shorter term reading. The longer term reading here does still remain intact, however. There is still some bearish momentum that's governing the stock. And I would suspect that would give some short sellers sort of the confidence possibly to start to sell into 227.15. But what needs to be remembered here is that the longer term momentum reading is still positive. This is something that has been tested. You can make the argument this has been tested on 5 separate occasions, and it is a very stable trend line. The slope here is not very dramatic or anything like that. This is a very stable upward trend line that has been tested on multiple occasions. So even though we do have this, these shorter term bearish readings here, the longer term reading does remain positive. So we would need to see a fairly significant reversal, probably below that 183.60 area, in order to start reversing this bias. So here's the current market update for MicroStrategy, stock ticker MSTR. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.